Good morning. It is Tuesday, July the 21st. Here's what's on the agenda. A surprise pick for UK Chancellor signals stepped up military spending. The US strikes Iran for a 10th straight day as Houthi militants threaten to blockade Saudi Arabia. And defence in focus at the Farnborough Air Show. We will bring you interviews with the CEOs of Helsoldt and Leonardo.
So, Tom, as defence runs really prominently through this programme, let's have a look at what's been going on in the Middle East and how that's been impacting on markets. This is the Brent price then for this morning, 88.43. So this is lower than it was this time yesterday. We were talking about $90 a barrel. It is down overnight, down by 0.9%, but it hasn't dropped all that far on the talk of what mediators might be able to do to try to step in here. MSCI Asia Pacific then giving us the really positive story that we're seeing through Asia. We saw actually some of the semi-trading over in the US, despite the Nasdaq ending pretty flat. The semis index, the SOX was up. And so we see some of that being reflected in some strength coming through for Asia tech. It's not just what's going on in Korea, it's plenty of other tech narratives through the Asia session coming in pretty strongly. And Euro Stoxx 50 futures, with all of that in mind, pretty flat this Tuesday morning. The countdown to the opening trade starts right now.
Well, the new Prime Minister Andy Burnham had promised, and his team had promised, a flurry of announcements. We're getting those. We're going to get cuts to electricity and energy bills coming through for the UK. And, of course, this on the back of the announcement that did come as a surprise to the political watchers here in the UK, which is John Healey, the former Defence Minister, taking over as UK Chancellor. Anna, someone who does have experience at the Treasury back between 2002, 2007 as a junior minister, but arguably more important for the markets, someone who obviously and notably and famously quit under Keir Starmer's government because he was dissatisfied with the commitments the Treasury is making to fund defence. So how much is he going to lean into that? How much defence spending, additional defence spending, and how are they going to fund that?
Yeah, absolutely. What does this mean for defence spending? And the suggestion is that he wouldn't have taken this job if he wasn't confident that he'd be able to get more defence spending, because that's, as you say, what he quit over very, very recently. So does this mean war bonds? And that's been the talk in the markets for some time. We will see whether that is something that is being considered by the Treasury. What does it mean for reform at the Treasury as well? Because this is somebody who, in a different department, has very prominently come up against the Treasury and described them as a block on growth. And so we do need to think about it in a sort of longer term, the way the Treasury operates, the way the Treasury relates to the rest of government. I think that's going to be really important. When you don't have many other fiscal levers to pull, maybe that kind of initiative might be appealing. And if we're going to see, if we don't know if we'll see war bonds, but if we are seeing that kind of thinking taking place, what does that mean for other off-balance sheet structures? Is that something that this government will dare to think about the day after we saw gilt yields up by 8 basis points?
Is it using infrastructure like the National Wealth Fund, for example? Is that the mechanism that they use to push through additional spending? Of course, the moves 8 basis points higher in gilt yields yesterday on the back of the new Prime Minister's comments around looking for any flexibility. So, yes, this is a Chancellor who is seen by many as a safe pair of hands at the helm of the Treasury, and someone who was seen by investors as the second best choice, at least in our survey. But there clearly will be a focus on any additional spend at a time, again, of policy announcements already from this new government around cutting taxes on energy bills to try to support households and try to alleviate some of the pressure on them. How you fund all of this with the current defence spending plan already seeing a £4.7 billion hole that needs to be filled.
So the defence question is a valid one and still pending. The cost of living action they've taken today, this is about VAT, as you said, taking that 5% VAT charge off energy bills. Important to note that they have said how they will fund that. And so that is, they've said that they're going to scrap the digital ID scheme. And so as a result of that, that's what they will use to fund that. As we're talking about the UK, Tom, let's just dive into some of the data that we're getting out on the UK. The unemployment rate over the past 3 months is coming at 4.9%. That's entirely in line with estimates and entirely in line with the prior number. Average weekly earnings, I can see that has come in with an increase of 4.3%. The survey was 4.5, actually. So that wage story, a little bit weaker than had been expected. So we will keep that in mind. Let's turn to the Middle East and what's happening in the Middle East with regards to the US and Iran. We've seen, as you say, a 10th day of tit-for-tat attacks taking place. Now, what does this do to oil prices? Well, we were about $80 a barrel yesterday. We're now at 88, but that's really around these lines that have been percolating for the past 24 hours, that mediators have been reaching out, have been trying to talk to Iran about a way to bring things back to the talking table. And really, that's what matters here, isn't it? It's whether these two sides, if there's anything still salvageable from the MOU, can they try and get back to the table to talk about that? Goldman Sachs, in the meantime, out with some research saying, yes, we're at 88 now. Their base case for the fourth quarter is $80 a barrel. But they do see, if we don't reopen the strait, that this could go to $120 a barrel.
Which is why it's so important to watch what happens in terms of Qatar and Pakistan, who are the intermediaries, of course, in terms of whether they secure what some are suggesting is a 10-day pause in fighting to try and reset communications between Tehran and Washington, as, of course, the flows through the strait remain heavily restricted. So we had been leading into this week looking at potential escalation, 10 straight days of attacks, but now suggestions that possibly there is an attempt at mediation, whilst the Houthis in Yemen threaten a blockade of Saudi Arabia, to which Saudi Arabia says they will defend shipping in the Red Sea.
And all of that adds up to a bit of an uptick in volatility around oil prices. So we're not back at levels that we saw when this war started, obviously, but we have seen a bit of an uptick in volatility. Is that going to be something that sticks to stocks? Well, so far, the stocks narrative, or recently, the stocks narrative has almost entirely decoupled globally from what's going on in the Middle East, even if in Europe we remain firmly fixed on these Middle East developments.
Currently, oil prices down on Brent, now 0.9% at $88 a barrel, $82 a barrel on WTI. We've been talking about defence in focus here in the UK. Also in the UK, what is happening in Farnborough at the Farnborough International Air Show, continuing for its second day, and defence is certainly a key thread there. Let's bring in Guy Johnson, who, of course, is on the ground for us at the air show. Guy, what are you expecting today from the event?
I think some reaction, Tom, to the stories you've just been talking to. So let's kind of break it down a little bit. I think the John Healey story will certainly be a big topic of discussion here. Will the UK step up in terms of its commitment to defence spending? There's a kind of second part to that, which is, will the UK as well, with Wes Streeting at the Ministry of Defence, also be easier to work with in terms of partnerships? Europe, as we know, has limited resources. Partnerships are going to be pivotal. How do you make those work? How do you get a bigger bang for your buck? I think these are all key questions. It looks like the UK is going to spend more money on defence. How does it spend that money better, I think, is also a key question that I think a lot of people are going to be talking about here. The other thing continues to be this oil price story. I was talking to Guillaume Faury yesterday, the Airbus CEO. He continues to push this line, and I think it's a fairly solid one, that airlines with higher oil prices and greater volatility around oil prices are going to want the latest, most fuel-efficient aircraft that they can fly. That will be the differentiator in terms of their business models. We heard from Ryanair yesterday. So those two topics, I think, that you guys have already discussed, I think are definitely going to be folded in here. We've got some great guests lined up. Leonardo is one of the big European primes, I guess you would call them, in the defence space. So we're going to be talking to its new CEO. He's only been in post for 10 weeks. It's going to be really fascinating to get his lie of the land. Europe needs to figure out a better way of working together, particularly on issues like the next generation of fighter aircraft. He's deeply involved in that process. How does Europe get together, work better together, I think is a key question we're going to be asking him. We'll talk to GE later. We'll talk about the next generation of engines. It's going to be another fascinating day here at Farnborough.
OK, Guy Johnson at the Farnborough International Air Show. And as Guy said, we will be speaking to global defence leaders, of course, throughout the day at Farnborough. Lorenzo Mariani, Leonardo's CEO, Orlando Sanchez, Lockheed Martin Aeronautics President, Lawrence Culp, GE Aerospace Chairman and CEO. So some fantastic names as well. Conversations, as Guy was saying, are throughout the day with that focus on defence. Yeah,
absolutely. So those are the voices we'll be hearing from the air show. Away from that event, we will be also having plenty of markets conversations, of course. During the programme, Maria Minucci, M&G Investments Multi-Asset Fund Manager, will be with us. Max Kettner, HSBC Chief Multi-Asset Strategist. And, of course, still on the subject of defence, but here in studio, we'll be talking to Oliver Dorre, who is the Helsoldt CEO.
OK, let's look ahead to what else we are watching throughout this Tuesday. The ASEAN Foreign Ministers meeting will take place in Manila. We'll keep across that for you. The European Parliament delegation visits China at a moment of increased tension when it comes to trade, particularly exports from China into the European Union. So we'll watch that as well. 9 a.m. UK time, the ECB's July bank lending survey will come out at 10 a.m. UK time. Germany's July ZEW survey expectations will be published. And later, US Defense Secretary Pete Hegseth will testify before lawmakers stateside over the Iran war costs.
Coming up on the programme, we'll look at the stocks to watch at the open. Novartis is reporting numbers today. The Swiss drug maker reporting a beat on sales and on profits. Plus, the Trump administration reignites its trade fight with Canada, vowing 50% levies on some imports from their northern neighbour. We will have details of that. Up next, Burnham's surprise choice for Chancellor. We will discuss what John Healey's appointment will mean for markets and the fiscal challenges ahead. If you have questions, please get involved in these conversations. IB plus BBTV Go is the function on the Bloomberg terminal. This is Bloomberg.
We will make this moment a circuit breaker for Britain, bringing forward the biggest changes in the last 40 years. A new political model and a new economic model.
A new economic model. Britain's new Prime Minister Andy Burnham speaking outside number 10 Downing Street just yesterday, of course. We'll be watching gilts at the market open after yields rose on the comments from Andy Burnham saying that he's looking for flexibility in the fiscal rules. The new Chancellor, John Healey, later described fiscal credibility as the bedrock for economic stability after his appointment. Let's bring in Daybreak Europe anchor Lizzie Burden, who was in Downing Street yesterday witnessing all of this unfold. And important to say, as we sort of alluded to there, that the John Healey appointment came after the gilt market closed. So I guess that's what we're looking ahead to. Talk us through this appointment then of John Healey as Chancellor.
Well, yeah, it was a big surprise given that the frontrunner had been seen as Shabana Mahmood, the Home Secretary who stays in that position. I've interviewed Healey several times as Defense Secretary, and he's seen as an old head, a veteran, someone who gets on with the job quietly and loyally. So you can see why Burnham's picked him. Remember, you talked about it, he quit Defence over what he perceived as inadequate funding, and so him being appointed as Chancellor is seen as a signal of intent on that front, and indeed those are the words used by Burnham in his call with the NATO Secretary General. In terms of the market reaction, as you say, it was more about the fiscal flexibility comments from Burnham himself rather than a reaction to Healey. But I would expect that gilt nervousness to continue because they're going to be flooding the zone, the Burnham team, now over the next 10 days with policy announcements. Today it's all about the cost of living. You've already been pointing out the announcement on cutting the 5% tax on electricity bills. That comes in from October. But I think what's notable about that is that they're taking money from the scrapped ID card scheme and using it to fund the cost of living, the breathing space. And maybe that's symbolic of the approach that will be taken going forward, and maybe it shows that they're going to focus on weighing on prices rather than lifting incomes when trying to give that breathing space going forward.
So that's the domestic story, and that is an area where arguably the new Prime Minister has a lot more experience than international affairs and foreign affairs. His first call was to President Trump, as you would expect, our closest, most important, at least military and security ally. How did that conversation go? What came through? Trump is notably a challenging ally to interact with from the UK's perspective.
Well, he's been invited to Manchester, Tom, of all places. Look,
did he accept?
We'll have to see. He did say that they'd be meeting in the not-too-distant future, that they had a very good conversation, and that bodes well, doesn't it? Because, as you say, it really isn't a crucial relationship for Burnham to get right, and he doesn't have diplomatic or defence experience, so he needs to build this relationship with Washington, even though he said that he'd be more upfront with Trump than Starmer taking that softly approach, of course. One of the first key material questions is going to be, does Burnham allow the US to use its British bases if the US continues or starts attacks on Iranian civil infrastructure, civilian infrastructure, and remember, the Middle East war, as much as Burnham would like to focus on domestics, the agenda is going to hugely impact the cost of living.
OK, Lizzie Burden, thank you very much indeed with that update on UK politics. We keep across, of course, announcements as they come through in the hours and days ahead. Let's bring in a markets perspective now with Maria Minichi, who's multi-asset fund manager over at M&G Investments. Maria, thank you for joining us around the set this morning. Are you reassured by the appointment of Healey as Chancellor?
Well, what we can observe is how the market has reacted, right, to these announcements and to the events that unfolded yesterday. I think what we're observing on Gilts is that there hasn't been actually a lot of risk on coming from this phase. Yesterday we have seen some movements that were higher than in other parts of the market, but in general, Gilts have behaved, in line with the bigger global events that we've observed. There is already quite a lot of risk priced in, and this is why we do like this exposure, especially at the long end of the curve over a structural and long-term perspective. But we've also been playing, opportunities from a more tactical standpoint. And so that has been a feature of the gilt market, but also more broadly of global government bonds, where we have seen volatility throughout this phase, especially as we enter the conflict at the end of February, and we have seen a lot of yields across markets, across curves, spiking.
So you're finding opportunities at the long end when it comes to the UK. Just unpack that view for us and what's sustainable.
Yeah, so I think you are seeing elevated level of yields at the moment from a nominal as well as a real yield perspective. The inflationary dynamic in the economy was cooling quite significantly before we entered this latest phase of conflict and increase in energy price. But fundamentally, the wage perspective in the UK from a labour market perspective, you don't have a wage growth spiral going on. So I think from a fundamental standpoint, both the growth and inflation picture over the long term look more supportive and back in this real yield that you're finding in this asset. Obviously, when we assess market, we have a very important behavioural lens, and that's also something that is playing out today on the gilt market. It's, as many other government bonds, quite an unloved part of the market. And the recent events in terms of political dynamics have had a bit of volatility to that. There is an embedded risk premium that is not just recent. It has been growing over time. If we think about where gilt sits today versus bonds, for example, the spread is very, very wide. And so over the long term, we do see as a potential opportunity, and this is something that is reflected in our portfolios in terms of duration exposure to the gilt market.
Yeah, that spread over bonds over the past 20 years or so, really widening out, hasn't it? Reflecting some real fundamental differences then, Maria. So just to linger on the UK for just a moment more, what should, if those at the Treasury are thinking about war bonds or other off-balance sheet measures, what should they be aware of? What is the sort of limits of the gilt market's tolerance, do we think, for that kind of innovation?
Well, I think that what we've seen is that the gilt market is very acutely aware of any single message that is coming from the government in terms of what they're willing to do, and is very quick to respond and give, its perspective on that. And so I think that will continue to be very visible in markets in terms of, steering and giving direction to the government. And, the fact that there hasn't been a huge reaction on gilt markets in the latest weeks up to yesterday, where again we've seen a little bit more of volatility, but nothing extreme, I would say, tells us that this is seen as a transition that is not a rupture with something we had in the past.
Okay, so this is one of the themes we're watching today, clearly, and this week is around UK politics. We're watching the AI trade. That's never far from our radars. And just in the last couple of trading days or so, innovation out of China has really leapt up the agenda, and rival models out of China have been interesting and sort of shaking people's belief in profit estimates in other parts of the AI space. Where does that leave you on Chinese assets? We talked about, I think it was one particular US bank yesterday that was upgrading Chinese stocks. Are you leaning into Chinese stocks? How do you see that developing?
I think there is a very interesting development in equity markets that we've seen unfolding in the last few weeks. The first 6 months of the year were very dominated by concentrated returns, by a few companies leading returns, and we've seen a very strong turn of that momentum trade just in the last few weeks. We have been very focused on trying to understand where the opportunities were outside that momentum trade. And China was definitely an area that was flagging as something that had been underperforming for a while. The other markets are where you could still potentially see opportunities. And the reverse in performance that we've seen in China in just the last couple of weeks has been very, very interesting. So to us, the story today within equities is to really try and diversify and be selective, finding opportunities outside what have been the biggest winners. We have been very present in the Korean equity trade. We were invested already in 2025 quite significantly, but we then reduced that and redeployed that capital where we see better opportunities. China is potentially one of those markets, but also markets like Indonesia, like Brazil, that have underperformed. And interestingly, in this latest phase, they have given some signals that potentially there is a value there. I think those are areas where it's worth looking at.
It sounds like that Chinese AI model innovation has underscored your shifting approach rather than led to a fundamental reset of your assumptions. Is that the right way to think about it?
Yeah, I think the AI theme will continue to shape markets for the foreseeable future, most likely. But it's what has been very clear in the last few months is that they're not the same companies that might continue to win going forward. So we have to be very selective on where we look for opportunities. And potentially these opportunities are widening right now. And so it's very important to consider, on the one hand, the price moves that have happened recently, because obviously, although we had quite a lot of correction, you're still seeing a lot of those stocks being up very, very significantly since the beginning of the year. The valuation of those stocks, and crucially, what are the earnings expectations for those stocks, which, are very elevated, and we have to be mindful of that. Even if that will continue to be the case, your valuation is basically resting on earnings expectations that are quite lofty, and therefore they're potentially a little bit more open to vulnerabilities.
Yes, I was looking at the SOX index, courtesy of our colleagues Jan Patrick Barnett, looking at the SOX index, heading for its worst underperformance in 25 years versus the wider market. So that's an interesting dynamic to watch. Maria, thank you so much for your time. Maria Monici, who is a multi-asset fund manager at M&G Investments.
Here's what else you need to know. This morning, JP Morgan boss Jamie Dimon, of course, has warned new UK Prime Minister Andy Burnham over the UK's bank tax surcharge. Speaking on the Master Investor podcast, Dimon reiterated his criticism that tax hikes could drive capital away from the country. Dimon added UK politicians should be worried about the number of companies that have delisted from London in recent years. The London Stock Exchange is reportedly planning to start a nighttime trading venue next year. According to the Financial Times, the new exchange will start in the first half of 2027 and operate separately from the main market. The report says it will initially provide access to exchange-traded products such as funds, tracking the UK or US stock markets. And the Trump administration has announced new 50% tariffs on a range of Canadian goods set to take effect in 30 days. The White House is citing what it describes as unfair Canadian treatment of US dairy, auto and alcohol exports. Prime Minister Mark Carney says Canada has made detailed proposals to resolve trade disputes with the US, and it is prepared to continue those discussions. So a reminder that the trade tensions between Canada and the US could continue. You've had different voices in Canada asking and pushing for a different response. Carney saying they're prepared to continue conversations, but they will respond, as they have done, in kind. There's a 30-day window to these additional tariffs that President Trump is now threatening.
Yes, indeed. And it speaks to the fact that we've moved, yes, the USMCA will be in place for another decade, I think, but broadly the Trump administration has moved away from that and says they want to move to a sort of rolling trade situation where they just reassess things every year. And that just adds a whole lot of unpredictability, doesn't it, for business who are making those investment decisions. So we'll watch how that one develops and how it goes down with business. 7:26 here in London. We'll keep the focus on defence this morning. Coming up, defence industry leaders are gathering, of course, at Farnborough. We'll be joined exclusively by Oliver Dorre, CEO of the German defence tech company Helsoldt. That conversation coming up shortly. This is Bloomberg.
Welcome back. Happy Tuesday. We are 30 minutes from the start of the opening trade. It is risk on across the Asian markets. US futures also pointing higher, but Europe not feeling the love so far. European futures, after losses of about 0.3 yesterday across the European equity space, currently flat. You're seeing losses being flagged for the FTSE 100, called lower by 0.5%. And the CAC current over in France also essentially flat, pointing lower by just 6 points. So Europe so far not seeing the upside from the turnaround. They're seeing in terms of positive sentiment, particularly focused on semiconductors over in Asia. And again, US futures pointing higher by 1.2% when it comes to the Nasdaq 100, Anna.
Yes, the FTSE 100 underperformance yesterday was notable, certainly in the early part of the trading day, and there from the futures picture it looks similarly so, weighed down by, I think it was AstraZeneca in yesterday's session in the drug space. Let's look at bond markets then. Yesterday the story around bond markets was quite UK focused, and we don't have gilts opening up for another 29 minutes, so we'll look for that, of course. But the European equity markets were dragged around a little bit by that gilt dynamic, and we did see yields going a little bit higher. Now those yields are coming down a little bit, so we're seeing a bit of buying across the European bond market space, but really not much in it, barely a basis point in fact in France and Germany, so not a basis point in France and Germany, so we won't make too much of that, but certainly we'll be looking for markets reaction to the appointment of the new Chancellor of the Exchequer here in the UK. We'll look for that at the start of gilt trading. That takes us on to defence, actually, because the new Chancellor was previously of the Defence Department. Now, global defence leaders have descended on the UK as the Farnborough International Air Show takes place. One of those leaders is the CEO of the German defence electronics firm Helsoldt. Oliver Dorre joins us now on his way to Farnborough, I think, for an exclusive conversation. Oliver, good to speak to you. Thanks so much for coming in. So I think you're on your way to Farnborough. You haven't been already. So what is the message that you're going to be taking with you to Farnborough?
Well, I think very clearly budgets, demand, I mean, it's heterogeneous in Europe, but looking at Germany is not the topic anymore. It's not the constraint. It's about delivery. That might be the constraint. We are ramping up our production. And also, I think if we want to deliver in time, in quality, at cost, and that is a demand of our customers, we need to partner up. So it's a lot about how can we partner to bring the best strengths together to deliver to our customers. OK,
so the focus on partnerships. You say that the question around Europe and maybe specifically Germany is not about budget. It's, that question has been answered, perhaps. But is the government spending in Germany, is it coming in as forthcoming a way as you would like it to? Are we seeing the actual spending coming as quickly as the market is anticipating? Well, absolutely. I mean, to be honest, we have been waiting for that planning security, as we called it. But ever since Q4, the orders are really pushing in. I mean, you saw it on our Q1 results, where actually we delivered a record order intake. 10 billion, almost 10 billion of order backlog. So that shows the demand is there, it's structural. But now really we have to ramp up in quantities, but also in qualities. It's about tech, and that's where Helsoldt is well positioned.
And there seems to have been this shift recently, particularly in the market focus on air defence and tech versus artillery and tanks, for example, in the defence space. Does that continue? How do you lean into that? How do you make sure that you can profit from that?
Well, first of all, Tom, I'm not so fine with the dualism of tanks or drones, but actually we need both. I think we need an adequate quantity to counter the war economies that we are facing as a threat. But on the other hand, we see in Ukraine, in the Iran war, that whoever sees first, whoever acts faster, decides quickly, those will prevail on the battlefield. So it's a lot about connecting the dots. And actually, that's where we are ramping up with our strategic axis, which is pioneering software-defined defense.
OK, and you talk about partnerships, the need for partnerships. Are you looking at acquisitions? Do you see more consolidation in the defence space? And is there the political will in Europe to allow that and to encourage that and to push that forward?
Yeah. Well, consolidation will happen. I think probably different than we had expected it 2 years ago. But it's really more, the discriminator is rather, I think, the ability to deliver, but also the ability to partner, to put things together. I definitely think the times of monopoly, the big ones, is really over. It's rather, everyone focusing on strengths, bringing the best things together. I mean, our mission has a deadline. The deadline is 2029. That's what the military leader said. That's where Russia is ready to attack Europe, to attack NATO. And that's why we need the best teams to work together.
And you need good relationships all round. You've talked about partnerships, Oliver. So I wanted to ask you a bit more about the relationships with the Defence Ministry, between the Defence Ministry and defence contractors. Given what we saw with that frigate contract that was announced, the nature of the announcement was seen as quite abrupt and it had an impact on markets. You've already set out the impact it has on your business. But how has that left relationships and communication channels?
Well, I think it underlines that really the speed, the reliability of industry is key. It's a clear signal. It's not about only signing contracts. It's really to be ready to deliver. So for us, I can definitely say the communication lines are open. So we will have the Minister of Defense joining us on Thursday, inaugurating our new plant. We have invested 300 million euro for a new optronics plant in Oberkochen. So the minister will be there. And I think that's also a clear sign that we work together. When I talk about partners, it's not only industry, it's also the government and the industry, which hasn't been the case, I would say, in the last decade.
Right. But is there still unfinished business around the frigate contract? I mean, Damen Naval, for example, they're initiating legal steps, trying to recoup some of the money that they lost on that. Any chance that you managed to recoup any of the money that you're without?
Well, I think for us, and I outlined the financial impact, it's a 200 million contract, so almost 1/3 of it is already recognized. So in that regards, looking at our growth profile, which is heavily on, I don't think that has a financial or material impact. The question is more looking at the strategy, and here I think TRS-4D, our radar, which was the core of the contract, sails on. I mean, it's still the family radar of the F-125 in Germany, of the Corvettes. And I think there will be more opportunities in the future. And same applies to the combat management system. We're working with Lockheed Martin. Germany has deliberately decided to have a harmonized combat management system for their ships. That's where we are ready to deliver. And going forward, I definitely see that we will, let's say, press the clutch and run the gearbox.
So the F-126 contract is scrapped. TKMS gets a contract for smaller vessels. Are you going to be a subcontractor to TKMS?
Well, let's see. The parliamentary decision on the first batch, which is the first four, clearly states that the F-126 contractors have to be considered as we walk forward. I would see in the end it's a customer decision. But the customer will take his time to really see how does he move on with the fleet. Because for sure, we see that we have to harmonize systems. Also I recently talked to the German naval leaders, where actually it turned out they have a topic with their people. So a heterogeneous fleet will not be able to be operated over time. So that's why commonalities, harmonized systems are key. That's where our radar and also the combat management system steps in.
Oliver, I know that the UK market is perhaps not front and centre on your radar, but you are here at Farnborough, so maybe good to get your take. We've seen a former Defense Secretary now become Chancellor of the Exchequer. Does that tell you anything about the seriousness with which Europe is taking defence spending? Do you see that message in there?
Well, the question is, do I need science? I think there are clear indications that Europe takes it serious. So does UK. I've attended a couple of meetings on Trinity House, where also Healey was still the defense minister. So I think there are close ties between Germany and UK as well. That's why we are here. That's why we're looking at it. We have 100 people in Enfield. So we have a UK operation. So we're ready to put meat to the bone of the Trinity House agreement.
OK. Oliver Dorre, CEO of Helsoldt, thank you very much indeed. As you make your way to Farnborough, of course, defence set to be a key focus on day 2 of the Farnborough Air Show here in the UK. On day 1 of the show, we spoke to the CEO of Airbus.
We're still part of the future combat air system that is more than a 6th generation plane. But indeed, the 6th generation plane, as it was structured at the beginning, is no longer there. So we have to find a way forward to the next 6th generation fighter for Europe. At Airbus, we want to continue to be part of it.
Well, let's bring in Guy Johnson, who's on the ground, conducted that interview, of course, for us at Farnborough. Guy, anything else that jumped out to you from that conversation with Dorre, of course, someone you've spoken to a number of times over the years?
Well, just think about the conversation you guys have just been having with Helsoldt. A very strong message coming out of that conversation about partnerships. And in theory, that should be the way that Europe moves forward. But it's struggling to do that when it comes to the next generation of fighters. You've got two competing programs. You've got the FCAS program, which was Germany and France. That has largely fallen apart. Now, Airbus represented the German portion of that. Where does Airbus go next? It's not going to be working, it looks like, in the same way with Dassault out of France that was originally envisaged. So that partnership has already collapsed. And this is where Europe's big challenge now lies, is trying not only to get the money, but also to get those partnerships to work. And that is the message that you're certainly hearing loud and clear. So what does Airbus do next? Does it go and work with BAE and Leonardo? I'm going to be speaking to the Leonardo CEO very shortly on the other competing program, the GCAP program, the next generation fighter. Can that work? Would that imply delays? If Europe can't figure out how to work better together, does that open the door for Lockheed Martin, for instance, to come in and sell more F-35s into Europe? It's certainly trying to push that line. But buying American is a really tough thing to do right now for European governments. So how do the Americans use that partnership route as well to work more with the Europeans as well? They become partners too. So you've got this kind of web forming, which we've already had, but it feels like it's becoming more important in terms of these various partnerships around Europe that can deliver the weapons program that Europe needs. But who is going to take away the lion's share of the money from that? How is that money going to be spent? These are really open questions at the moment. Some places it's working, some places it's not. And next generation fighters looks like an area where it's a real struggle right now to get this to happen.
So, Guy, in the defence space, then, partnerships certainly one of the things that you're telling us stands out then from Farnborough. On the civil side, which Farnborough is also about, lest we forget, I know that you spoke to the CEO of Boeing. What were the conclusions of that conversation?
Again, in some ways, there's some big challenges that lie ahead. We talked a little bit earlier on in the programme. There is this. At some point soon, there is going to have to be a decision made about the next generation of narrow-body aircraft. They're going to replace the 737, the 737 MAX, and the A320 family out of Airbus. Who goes first and how that's going to work remains an open question. I did speak to Kelly Ortberg yesterday. He is the CEO of Boeing. He's been in the job for 2 years. He came in with a need to stabilise the business and to put it back on the right track. Certainly the Trump administration has helped him with that. He's not quite ready to make that decision on kind of how the next generation of aircraft is going to look and when that's going to come. Because at the moment, and take a listen to what he has to say, his focus is still kind of in the here and now, getting Boeing back operationally to be able to deliver the customers, the aircraft that his customers want.
We're turning the corner. I tell my team we haven't quite finished turning the corner. We've got more work to do, but I am pleased with the progress so far. We're ramping up production across many of our product lines. Markets are very strong. So our backlog is very, very strong. So our story is really focusing on executing that backlog.
It's about operationally delivering right now, and it applies to the defence sector as well as the civil side at the moment. There is a relatively strong market within the civil space at the moment, but you've got to be able to deliver. And both Airbus and Boeing continue to struggle to be able to do that. The supply chain remains a huge issue. Getting these companies on track to deliver the aircraft that the customers want remains a challenge. And it's the same story in the defence space as well. So in some ways, we are migrating from a world where the money's the issue. It remains an issue in the UK, but elsewhere maybe less so. And it's now about how do you deliver that capability? Which partnerships are going to work? Which kind of permutations of the various defence and civil companies out there are going to work to deliver what customers, both in the form of governments and in airlines, ultimately want? And that remains a big challenge, I think, for many of the companies here at Farnborough.
OK, Bloomberg's Guy Johnson at the Farnborough International Air Show. He'll be trying to extract, of course, some questions and answers to those questions in the hours ahead with further interviews. Guy will be speaking to global defence leaders throughout the day at Farnborough. Lorenzo Mariani, Leonardo CEO, Orlando Sanchez, the Lockheed Martin Aeronautics President, and Larry Culp, the GE Aerospace Chairman and CEO.
So a lot of focus here in the UK on defence and on aviation more broadly. In UK politics, the new Prime Minister promising a roadmap for renewal in the UK.
Later this year, I will bring forward a new plan for Britain, a 10-year plan, laying out a path from where we are now to where I believe we all want Britain to be, wherever we're coming from, whatever party we support.
Prime Minister Andy Burnham speaking as he arrived at Downing Street to take over from former Prime Minister Keir Starmer. We'll discuss what his premiership could mean for markets and the fiscal challenges ahead next. This is Bloomberg. Welcome back. This is the opening trade, 7:49 here in London, and European equity market futures suggest we'll be a little bit weaker, perhaps underperformance in the London market, which will be interesting to dissect and interrogate. Let's turn our attention to the markets in 3 minutes on the opening trade with Adam Linton from our Bloomberg Markets Live blog. And Adam, at the time we're speaking to you, we're waiting for gilt markets to open this morning, and that's going to be important, is it, as a kind of verdict on the appointment of John Healey, because that happened after gilt markets close. But what do you make of the gilt market story right now? There is a danger, we've seen this with perhaps the last couple of budgets, or at least the last one, that the markets are just always waiting for the next budget to take place.
Yeah, I think, in terms of the setup, I think the assumptions we had heading into yesterday have been undermined. A, we thought Mahmood would be Chancellor, and then B, we thought Burnham would play relatively safe with the fiscal rules. We've now seen that Healey's going to be appointed Chancellor, and yes, we don't know loads about what exactly he's going to bring to the table, but the obvious inference is higher defence spending, given how he left the Keir Starmer administration, and the question is, what crowding out effect does that have? Then for Burnham, obviously, he carries a lot of sway. He's First Lord of the Treasury, of course, and also he clearly has a stronger policy platform that we've seen with Starmer, and he's now shown signs he wants to play a little bit more loose with those fiscal rules. And we've seen that this morning. We've seen they're going to cut taxes on energy bills. There's a lot of questions about how exactly that's going to be funded. And I think if you take that at a time when energy prices are high, that is going to be negative for gilts. We've seen UK 10-year yields around about 5% yesterday already. And I think in the short term, UK paper will probably underperform that of the US. We saw that soft US CPI report last week. And yes, we may see the budget later this year, massage some of those concerns eventually, but there may be a bit of a runway where, we are going to see more fiscal angst. I think from an FX perspective, the pound doesn't really care too much. I think the higher carry is more important.
Yeah, and there's a debate, isn't there, as to whether or not the energy story emanating from the Middle East actually has a bigger impact on UK assets than maybe domestic politics. You've been thinking about the European stocks and relative resilience in the face of the geopolitical headwinds?
Yeah, I was off last week, and then I came back yesterday. I saw Brent was on a 90 handle, European natural gas prices were at multi-month highs, and Stock 600 was doing nothing. In fact, it had done nothing when I was away. We're down 2% from all-time highs. A month to date, Stock 600 outperforming the US, outperforming Asia. And I think part of that is, kind of optimism that eventually a deal, will be sought between the two sides. We've seen some reporting over the last 24 hours suggesting that is the case. I also think from a macro perspective, there's a relatively high bar to price a growth shock from the conflict at this stage. PMIs never really rolled over that much in the midst of the conflict. They rose last month, expected to do so again. And then also, the fact that there's a high bar to price a growth shock is allowing Q2 earnings to be in focus, which are relatively strong. They're expected to show up momentum throughout the year. And Europe's also offering an offset for any tech angst in the market. Yeah,
talking tech angst, briefly, Adam, we're going to get tech earnings, aren't we? The start of them this week. I'm still not sure if we're looking for big CapEx numbers or less big CapEx numbers.
I think it's a case of threading the needle. You don't want too high capex. You saw that from TSMC last week. You don't want too low. You'll see AI angst, resurface. I think the key is how did chip stocks react to this? Are we going to see rotation out of chip stocks into hyperscalers, or are we going to see, good tech earnings lift all boats? I think that's the key focus we need to look for.
Adam Linton, thank you very much indeed from Bloomberg Markets Live. Let's bring in your stocks to watch now. Chloe Melly standing by. Chloe.
Good morning, Tom. Let's start with Novartis this morning. The pharmaceutical company has beat estimates, and that was thanks to a very strong performance from its new cancer medicines, which actually allowed it to offset the impact of generic competition on its best-selling drug, Entresto, which is a heart disease drug. And so this suggests that the CEO has been doing a pretty good job of countering that generic competition, which is facing a lot of those big pharma companies. And we could see these strong earnings this morning lift the shares after an already very strong performance from Novartis so far this year. Staying in Switzerland, but going over to a slightly less positive story, we've got the watchmaker Swatch this morning coming out with earnings that were well below estimates, but at the same time saying that the second half performance was going to be much stronger after an acceleration in sales in July. And so we'll see what investors decide to focus on this morning, those disappointing earnings or that better guidance. We have seen actually Swatch outperforming Richemont, the other Swiss watchmaker, which has been doing very well lately. So we'll see if this picture changes at all this morning. And finally, of course, UK defence is going to be in focus after the new Prime Minister Andy Burnham named John Healey as Chancellor. That suggests that there might be higher defence spending. So we'll be watching out for any impact on some of those defence stocks in the UK today. This is something that investors might welcome, but at the same time, there are some challenges with Bloomberg Economics saying that there will be intense focus on Healey's plans from financial markets, given that this higher defence spending does need to be funded in some way. And so we'll be watching out for any impact there on that UK defence sector.
Chloe, thank you very much. Chloe Melly with Stocks in Focus. Interesting, Kier Group, which is a construction business, Tom, they're out with some guidance to the markets, talking about coming in at the top end of estimates, based in Salford, Manchester area. Very fashionable these days to be based there. Anyway, yes. just flagging that the revenue at the top end of estimates, I've seen some calls that one could be higher at the start of trade.
Rates dependent as well. And we're going to have a firm eye on what happens with the gilt markets with the appointment, of course, of John Healey as UK Chancellor. That took most people by surprise. European futures are currently flat after a rebound in the chip trade in Asia. US futures pointing higher by 1.3%, but flat when it comes to European futures. We bring you the open next. This is Bloomberg.
This is the opening trade. A few minutes until we get that opening trade in cash equities here in Europe. And this is the handover from the US yesterday. Maybe it tells a bit of a misleading story, though, about the global move. But interesting to note that we did see a bit of a drift downwards in US stocks after European markets closed yesterday. So that's one part of the handover. But we go a bit deeper and we see that actually semiconductor stocks got a bit of a bounce after last week's heavy selling. That has been a positive momentum, provided positive momentum into the Asia session. So the Asia session has been quite buoyant from Tokyo to Taipei. We've seen strength coming through in Asia, but not with wild swings like we'd previously seen in the Korean session, perhaps. And so maybe that adds up to something more positive, and US futures, as a result, are pointing a little higher. Let's have a look at the European futures picture, though, because sometimes that tech theme entirely bypasses Europe. Sometimes it very much is front and centre. But this is the futures picture then. Euro Stoxx 50 futures overall set to go nowhere. DAX futures pretty flat as well. FTSE futures, maybe some underperformers there, just as we saw yesterday, Tom.
On the individual stocks that we'll be watching, well, we'll be watching a group of UK stocks, of course, on the surprise announcement of John Healey as UK Chancellor. We'll see if there's any movement around that announcement. Novartis, in terms of the strength of the earnings coming through, profit beating estimates, pointing to decent growth for that UK-listed drug maker, or Swiss-listed drug maker, I should say. And over in the watchmaker Swatch, interesting in terms of an upbeat guidance on sales growth. Profit came in as a miss, but it was upbeat guidance for sales growth. So potentially a positive story, in fact, for Swatch, at least pointing forward, Anna.
OK, so that's the list of stocks that we're watching today. Certainly underperformance in London was notable yesterday. Some of that coming from the drug sector. So we'll watch to see whether those Novartis numbers add anything specific to Novartis or to the drug sector more widely. So European equity markets opening for the second trading day of the week. We have a new Prime Minister in the UK. What material difference does that make, if any, to expectations around UK profitability for big caps, for mid caps? We'll watch all of that. We'll watch the start of gilt trading. I know those gilt markets will be opening up just about now. How has the appointment of John Healey, who's the new Chancellor of the Exchequer, formerly was the Defense Secretary, resigned from that post because of arguments with the Treasury, actually, about funding. So we'll see what that does to expectations around gilts. But for the moment, the picture across Europe then is, as expected, underperformance, Tom, on the FTSE 100 and more broadly, pretty flat across European equities.
Across your sectors, as a result of higher prices in gold and silver, silver's up 4.4% so far in the session. Copper also gaining about 1%. Basic resources is your top sector, at least in the opening minutes of trade this Tuesday. Basic resources as a sector gaining 1.3%. Tech also performing well, up 0.8, with the baton handoff from Asia and the US, of course. A return of strength from the semis trade in Asia. We'll see how long that lasts. Tech gaining 0.9%. On the downside, most of the selling pressure coming through for media, personal care as well, so luxury under a little bit of pressure. Media is down 0.7%, personal care and products down 0.7%. Travel and leisure, which also sold off yesterday as a sector, seeing some further selling, just down 0.6%, with the benchmark now, Stock 600 up just 0.1%, Anna.
Yeah, healthcare, another day of weakness for healthcare. We've got some of those healthcare stocks that were weaker yesterday. Weaker once again. AstraZeneca down 1.3%, Siemens Healthineers, GSK, all of these in negative territory. Some of them yet to open, though, within that sector. Let's look at what's going on the bond markets, though, because as mentioned earlier, the gilt market story, really interesting to watch, and very interesting that it's not really moving very much. That in itself is perhaps a story, because yesterday we saw an 8 basis point move higher. That's at the 10-year horizon for UK gilt yields. All of that, Tom, was on the back of this language that we heard from Andy Burnham about using flexibility within the existing fiscal rules. Just how far does he want to push those fiscal rules? What does that mean about off-balance sheet financing? All of those questions then in the markets. And we saw those basis points higher on yields. But today we see something, well, not hugely different, or at least we haven't pulled back from those levels, but we're not seeing gilt yields climb.
Yeah, the gilts actually is not breaking away from what we're seeing in treasuries and sovereign debt over in Europe as well. So a slightly more benign picture on the back of that appointment.
Yeah, absolutely. So the market's taking that appointment in their stride. Let's talk about the markets then in a broad sense. Max Kettner joins us, Chief Multi-Asset Strategist over at HSBC. Max, very good to see you. Thank you very much for coming in. So we sit here with a number of divergent themes heading into another European earnings season where, or in the midst of a European earnings season perhaps, where we're waiting for some new clues really as to what happens next. Because the oil price, yes, it went higher on developments in the Middle East, has come down a little bit. The AI theme rumbles apace and we're looking for new clues as to what to watch there. So what's in focus for you this week?
I think actually the focus is probably the hyperscalers. Tomorrow and next week, right? So the Mag 7 earnings, I think that will be probably the focus, what they're going to do with CapEx, what they're going to do in terms of free cash flow projections, what they're going to do in terms of bond issuance and so on, right? So there's so many narratives, I think, where the Magnificent Seven actually can be, and the hyperscalers in particular, can be actually surprising to the upside, not only in terms of the numbers, but also in terms of the narrative, right? Because when you look at tech, so when you look at the numbers first, tech in the S&P expected to grow about 12.5% quarter over quarter, Q2 versus Q1. But that's entirely coming from semis, right? It's only semis. The rest is actually minus 1.5. So if you exclude semis
that's looking forward
from
or
tech,
back?
No, that's just Q2. Right. So that's literally comparing Q2 versus Q1. It's 12.5% earnings growth expected. But actually semis is something like 28. And the rest is minus 1.5. So imagine how much actually the hyperscalers can surprise to the upside in terms of the numbers, number one, but also in terms of the narrative. Because think about if they say things like, well, you know what, actually, we might not need as much CapEx, right? And that's not to say that they're saying, you know what, we might have to cut CapEx. No, but if you think about the hyperscaler CapEx estimates already, they went up 30% already for this year. They went up 55% for next year. So obviously we're sitting here and we're saying, you know what if they just say, yeah, we drove it up 30%, that's it.
Okay.
Right? And they're not even saying we're cutting it, just that's it. We don't upgrade it further. That already would be an upside surprise.
So that's the background expectation around some of those hyperscalers, around that part of the tech landscape in the US. Another part that you mentioned already of the tech landscape has actually been under pressure recently, and that is semiconductors. Yeah. I was looking at some analysis by a colleague on the SOX index versus the S&P. We've seen the widest underperformance in semis versus the rest in more than 20 years. And I wonder what that tells us about where this AI trade heads next.
To be fair, I don't think it tells us an awful lot. I
think it's why.
Yeah, I think, but let's be honest. So you guys have it on the screen right now. I think look at what's happened in May and June, and look at what happened. It went up
a lot, and now it comes down a lot. Is that the analysis?
I think that's the analysis, right? Because let's be very honest. I saw it yesterday. I was like, and I had a couple of my clients saying, lots of people are pushing for a rebound in momentum and a rebound in semis. I'm like, why? I'm like, well, because it's sold off. I'm like, cool, great. Anything else? Like, the problem is, and I've got to be completely honest, I have no conviction on that because there's nothing really that I can analyze, right? I can look at maybe a couple of technicals like RSIs or oscillators or something like that, right? Or we looked at a couple of momentum signals. They don't look particularly oversold yet, right, on the semis. But otherwise, I mean, it's mainly driven by Asia. It's mainly driven by Asia degrossing in Asia retail. How do you gauge when it's over,
but
right?
I suppose
We can't really gauge
when
it's over.
Where profits in the AI stack accumulate, isn't it? And hyperscalers was the thing at the beginning of the year, and then it was semiconductors and memory.
But I think
we ask questions about where it goes next.
Hasn't that paradigm, Max, have to be shifted? I mean, was that not a DeepSeek moment on Friday?
See, this is what we're going to say, right? Is this the DeepSeek moment where we're going to go basically back to January 2024, where it's basically, now we're going to buy China equities because, and particularly China tech, because we've underestimated how much China has actually advanced in the AI race. But let's face it, when you look at Asia's tech, you've got your Baba, you've got your Tencent in there, you've got your Meituan in there. So you've got a lot of the AI adopters that actually, in terms of profitability, at least for now, look less attractive than what the hyperscalers look like, right? So actually, I don't think it is the same way you're saying, wow, now I need to rotate out of US tech into China tech. I don't think that's, at least tactically, the play here. I think it's still in US tech, it's still the hyperscalers, and in particular, how much the hyperscalers have been used as a funder, as a short in the last 3 months.
So tell us exactly what the hyperscalers have to tell you to make you convinced that story continues for them. How do they balance that CapEx spend that needs to continue with ROI? What exactly is the message?
So Tom, I don't think it's what they have to tell us. I think it's more about the bar to beat, the bar to be surprising to the upside. Not only in terms of the numbers, but also particularly in terms of the narrative is so small so low because think if they say, actually, we don't need to issue as many bonds as people had feared. Already great. If they say, you know what, we've driven CapEx estimates up by 30% already this year, we're not going to do any more. Great, all right? They don't even have to cut. They just have to not upgrade it even more. Or if they say, you know what, we might actually not be free cash flow negative by 2027. Already great. So there is, you know what I mean? Like there's so many little puzzle pieces.
An opportunity to lean into hyperscalers, which are sold off.
Definitely. So for me, it's much more the hyperscalers than the Mag 7, right? The sell-off that we've had in the Mag 7 in May until mid-June, I think that is overdone. It's much more longer hyperscalers and getting still out of the sense.
And so where does that leave Max as far as Max bullish goes? Because I want to point out so that everybody knows. So February 2023, you started upgrading stocks to overweight. Others have backed off since, but you didn't. And your conviction around stocks and willingness to stay with stocks, I suppose, is one of the reasons why you ended up getting, I think it's the 5th year in the row, Nextel top ranking for you, which is excellent. Well done. Congratulations. So what does that mean in terms of your Max bullish call? Do you see chinks in that bullishness now?
I mean, to be fair, if you're maximum overweight equities, there's only one choice you can make, right? I can't be more bullish than that. So the only choice is when I can stay there, but we've been max bullish now really since mid-March, right? So since the 3rd week of March. So it's, in hindsight, a week too early, right? Before the trough, so we didn't quite catch it correctly. But it was all right. But now I think we really need to get to the point, okay, when do we want to get out? And the second choice, of course, is do we want to be medium overweight? Do we want to be neutral? Do we want to be underweight, right? That's the next choice. I think there is a couple of things. Clearly, positioning is more stretched now, right? So when we look at the H2 outlooks, we look at sentiment among long-only investors, then actually that is starting to be looking as stretched as it was during the reopening trade in 2021. Not quite there yet, but we're starting to get there. That's one. All of our shorter-term positioning framework is saying the same. It's starting to flag some sell signals. And also, when you look in terms of fundamentals, there are some cracks, right? Some of the credit card data in the US is showing that things are starting to tail off, right? A lot of the tailwinds, a lot of the impulses that we had in H1. Think about the big, beautiful bill. Think about in the US, we had 20% higher tax refunds in H1 compared to last year. All of those impulses have happened already in H1. You guys probably were talking about it in the last few months as well, how big, how strong those US activity, these US economic surprise indices were. But all of that has happened already in H1. So to me, I think ahead of the midterms, after the earnings season, right, in a month and a half, I think that's probably the time where you want to take a little bit of your foot off the gas.
Yeah, that's interesting. It's worth noting this profile of Max on the Bloomberg. There's some fantastic photography, Max. There's a picture of you walking moodily underneath the HSBC logo with the lighting. Fantastic, worth it just for the photo. Max, what does that reduction in risk exposure post earnings look like?
Yeah.
So where does it take you?
Yeah, so I think, look, I don't think this is definitely not, this is the beginning of the end and my God, now we're out. No. What I can see is that ahead of the midterms that there might be some concerns, ahead of the midterms around what is happening perhaps in terms of the fiscal impulse in H1 2027 after we've had this fiscal impulse now in 2026, which was on par. It was really the similar magnitude that we had as the financial crisis in 2009. So might we even have a bigger negative fiscal impulse now in 2027? What does that mean for growth? What does perhaps, the Democrats coming in, maybe the poll saying 50-50 for the Senate, what does that mean around AI regulation, data center regulation, all of this stuff, which actually then is not a hyperscaler versus semi-rotation, but it's just tech down, which drags everything down. Again, that doesn't mean start of a bear market, but is that good enough for a 5 to 10% correction ahead of the midterm, September, October, plus seasonality, plus, a bit more stretched positioning? Yeah, I think so, right? And then after the midterms, it's probably then time to buy again.
And in terms of things that are not directly linked to AI, and that maybe takes us into Europe a bit more, Max, what are the best opportunities right now that you see in Europe, either related to the AI theme around supplying it or decidedly removed from the AI theme?
So number one is actually Europe broad-based. So we've upgraded European stocks a couple of weeks ago because we wanted to lean more into that broadening trade, right? So your equal weight S&P long, bit more value, less momentum. And if you look at the equal weight S&P and you look at that over just European stocks over the last 2.5 years, it is virtually the same line. So if you want to play from a regional perspective, if you want to play broadening, you end up long Europe. Right, that's number one. I think in Europe, the best sector that I can still see is banks. Right? You look at the banks, you look at earnings revisions in H1 when the Bund yield curve was flattening. The worst that happened was actually that earnings revisions were stopping to outperform earnings revisions of the broader European index. They didn't underperform, they just performed in line. That was the worst that happened, right? So, and obviously with that tiny bit of steepening that we had about a month ago, that already propelled banks higher. So I do think any kind of little bit of whiff of steepening in the Bund curve that can just really get the earnings train in banks going again.
Max Kettner, always a pleasure. Thank you very much indeed. HSBC's Chief Multi-Asset Strategist. Let's check in on your Core 6 this Tuesday then, as we think about a readjustment around the semis trade that we've seen in Asia and tech doing a bit of a pickup in the session in Europe today. And so you're seeing that reflected. ASML, a decent print there so far for that lithography make, currently up 2.6% gains. In the defence space, up 1% for Rheinmetall. A bit of weakness, though, over in Novo Nordisk with the drug maker. LVMH, you're seeing a little bit of pressure across luxury, currently down 0.5%. Nestle also a little weaker by 0.7. And Schneider Electric in that tech basket, exposed to the data centre story, gaining 1.2%. Let's get a check on some of the other individual stocks now on the move and bring in Chloe Mallet standing by. Chloe.
Good morning, Tom. As expected, we are seeing those UK defence stocks react very positively to the appointment of John Healey as UK Chancellor. And so we are seeing, in particular, Babcock seeing a very, very good day this morning, up more than 6%. But really across the board, that the UK defence sector is doing very well, responding very well to this appointment. Moving on to tech stocks, and we are also in the green there. We have Soitec, Prysmian, ASML, Infineon, all of this kind of AI-related chip-related stocks in the green after the AI trade came back quite strong in Asia and now is spilling over into Europe. The pullback in oil prices is also contributing to positive sentiment there. So we're also in the green all over there. We're in the green as well for Mighty, which is a facilities management company here in the UK. It's up almost 40% this morning after OCS International, another facilities management company, agreed to acquire it for £3.1 billion. It does mean one more company company leaving the London Stock Exchange, but we are seeing a huge boost in the shares this morning. And finally, Hugenreich, I think this is how it's pronounced, is a forklift manufacturer, is down very, very much, significantly this morning, 5% after the German regulator opened up a probe into the sale of its Russian business, saying that it might have violated accounting rules. And so we are seeing the shares down this morning for this forklift manufacturer.
OK, Chloe Millet. Chloe, thank you very much indeed on the Stocks on the Move this Tuesday. Coming up, we're going to look at how markets are reacting then to another UK Prime Minister, another, of course, and more analysis coming up next. The gilt markets relatively relaxed so far today, of course, after a sell-off yesterday. Stay with us. This is Bloomberg.
Welcome back. This is the opening trade. Let's have a quick look at how UK assets are moving today. We've got the pound up by 0.1%, 134.47. FTSE 100 down 0.2%. That typically doesn't always reflect UK politics because there's so many big global businesses in there. But we had seen that some of the defence names have been trading higher. The UK 10-year yield looks fairly range-bound, so does the 30-year yield. And the new information that the bond markets are dealing with, of course, is around the appointment of a new Chancellor. Andy Burnham, the Prime Minister, there naming the former Defense Secretary John Healey as the new Chancellor of the Exchequer. The choice was a surprise for many and fueled speculation that more spending on defence is on its way. Let's bring in Bloomberg Markets Today editor Sam Unstead, who's been across all of this UK news flow, of course, for Bloomberg clients. And so, Sam, interesting then to see what we've got here in response in bond markets to the John Healey announcement, because that's the new information today, and bond markets went nowhere. So they seem to have taken this surprise in their stride.
Yeah, well, so gone nowhere, but having sold off a little bit towards the end of yesterday.
Yes.
So, throughout yesterday, there was a little bit of a premium going on to UK yields anyway because of oil prices. And then as we got to the end of the day, the comments about flexibility, which actually are not too far different from what Andy Burnham has kind of said previously, there was a little bit of a sell-off into the close. So I think what you're seeing now is a kind of consolidation of that extra little bit of political uncertainty premium going back into UK bonds. With Healey, you already mentioned defence stocks going up a little bit because I think all that really anyone has to go on in terms of any kind of detail of what John Healey may or may not do is that he used to be the Defence Secretary and fought very hard and indeed left his job because they weren't getting enough funding. Now he's in a position to be able to provide that, and it's how they provide that. Yeah. So do they provide that through sort of broad flexibility, or do we come back to this question of war bonds, defence bonds, and how would the market treat that?
And that's just one piece of the puzzle, because we were talking at the start of the show, Anna and I, about the fact that the government has announced, the new government, just in recent hours, the last couple of hours, a cut to VAT on energy bills that was framed as being funded by the money that would have otherwise been spent on digital IDs, a programme that, of course, has been scrapped under Andy Burnham. We've then had a post on X from the ex-minister, UK Chief Secretary to the Prime Minister, formerly, Darren Jones, saying that actually the ID scheme was not itself funded, which what it does, if we get away from the granular details of the particular proposal, it reminds us that there's a lot of commitments that this new Prime Minister is making, and it's not clear how they're going to be funded.
Yeah, and we now are in this cycle with Gilts, and we have been for a long time, where long-term sort of has stopped existing. So these things are being assessed on an almost day-to-day basis, which for bond markets is not necessarily the healthiest way to do it. But as you get these pieces of information through, there's already a kind of very broad uncertainty, like what are they going to pursue? What kind of budget are we going to get later in the year? And then these questions of, the spending that's already come in the first, we're less than 24 hours in. Are these things funded? Does that add a bit more uncertainty? And that is the key problem, is that in order to get control of that, they need to keep announcing things, being very clear about fiscal discipline and keeping within the fiscal rules.
Yes.
But as I say, we're less than 24 hours in. It's not even 9 o'clock, in fact, on Tuesday.
Yeah, absolutely. It's not 9 o'clock. So not very far into this new administration, but they do want to hit the ground running, and they do want to make lots of announcements. And that's the contrast that many people have called for, I suppose, in in contrast to the early days of the Keir Starmer government, who'd had many years in opposition and then seemed to hit the ground running with not that many policies up front. Yes. And that's what seemed to underwhelm.
Yes,
Summarising complex analysis.
No, but that's right. And so they are attempting to differentiate themselves from that. You have already had a couple of things come out, as you mentioned, on electricity bills. They'll probably be broadly welcomed, but the question very consistently is going to be between balancing the politics of doing these things and balancing what bond markets want to see.
Sam Hunstead, thank you very much indeed. As ever, we appreciate your agility around the UK story and the impacts across these markets. Sam Hunstead with the analysis. One factor, of course, that will be a challenge for this new UK Prime Minister and his team will be the energy price story, the geopolitics, of course, emanating out of the Middle East. The US says it has completed a 10th day of strikes on Iran after President Trump promised Tehran would pay for the killing of 3 US soldiers. Threats by Iranian-backed Houthi militants to blockade Saudi Arabian shipping in the Red Sea, meanwhile, risk the conflict expanding further. Let's bring in Bloomberg's Stephen Stupczynski with the details. Stephen, how seriously do we take this threat from the Houthis? Could it materially change the situation when it comes to the Red Sea? And where do things stand when it comes to the Strait of Hormuz?
Right now, the oil market seems to be in a wait-and-see situation for how the Houthi threat is going to materialize in the Red Sea and if it will lead to any disruption. If it does lead to a disruption, answering your second question, this would be a big deal. Saudi Arabia has been using the Red Sea as a main alternative to the Persian Gulf and the Strait of Hormuz since it's been disrupted over 3 or 4 months ago. The East-West pipeline has been key for Saudi Arabia to export about 4 million barrels per day into the Red Sea and then through the Bab el-Mandeb Strait, which is the key waterway to get it to its customers in Asia. Now, the Houthi rebels are looking at potentially disrupting that Bab el-Mandeb Strait. They've done so in the past, famously in 2024. Now, whether this will actually materialize, whether they can do it, is another question. We're not seeing any big disruption. What we are seeing are some ships signaling that they're not Saudi. There's one vessel that went through signaling that it is Indian government owned, saying, hey, we're not with those guys. But if we do start to see some ships turn around, if we start to see ships attacked, and more importantly, if we start to see Saudi Arabia reducing flows into the Red Sea, then we will see most likely a very large reaction to oil prices because take away the Red Sea, and that removes one of the key alternatives, levers that Saudi Arabia had to get away from the Strait of Hormuz.
Yeah. And, Stephen, I spoke to Goldman Sachs yesterday, who were making that very point, suggesting that, yes, those alternative routes had proven themselves to be pretty useful when the Strait of Hormuz was closed. And that took us on to thinking about European gas and the extent to which European gas is going to be understocked, if you like, or stockpiles are not going to look as healthy as they would usually do heading into a winter. Is that something that's worrying the markets?
I think absolutely. I mean, you look at LNG and natural gas prices in Europe. We're at the highest level since March. Prices have been steadily rising, actually sort of outstripping oil prices over the last few weeks. And I think one of them is the lack of alternatives. Oil you can ship some other ways. There's the ADNOC shuttling service that they've developed, but for LNG there are no alternatives. And a fifth of global LNG flows comes out of the Strait of Hormuz. It's produced by Qatar. So the longer this continues, the tighter the market gets and potentially the higher gas prices get in Europe.
Stephen, thank you very much. Stephen Stupczynski with the view of the energy markets as a result of what's happening in the Middle East. Coming up, we'll get back to the defence theme. We'll head back to the Farnborough Air Show. Guy Johnson is on the ground for us. We've spoken to him about the civil dynamics and the defence dynamics unfolding at this Farnborough Air Show in 2026. He'll be speaking to the CEO of the European defence firm, Leonardo. How much are partnerships very much at the centre of that conversation? That certainly stood out in the conversation we had with the Helsoldt CEO earlier on. So Guy Johnson will be back shortly talking to Leonardo, the Rome-based defence business, defence electronics, defence systems, all of that in focus. That's next. This is Bloomberg. This is the opening trade. Good morning. 30 minutes into today's session, and we're looking pretty flat actually across European equity markets. Overall, not going anywhere, but the difference seems to be technology. So where we have substantial presence of technology names, we're outperforming a little bit. I mean, the DAX is just into positive territory, I was saying, as it turned negative. We're unchanged on all of these markets that have some tech influence. The FTSE 100, a lot less tech, of course, and so that one is down by 0.3%, Tom, because the handover from Asia, from the US into Asia, was that technology, particularly semiconductors, actually was outperforming in the US session, and then into the Asia session we saw strength across the Asia technology landscape, and that does seem to have found a little bit of a niche here in Europe.
Yeah, you are seeing that beneath the hood, as you say, when you look at some of the individual tech plays in Europe, but broad-based, what we're seeing is volumes modestly higher, just up 3% versus that 20-day average. The majority of stocks then in negative territory so far in the session this Tuesday. 399 in negative territory, 184 posting gains at least so far. So talking of gains, let's flip the board and have a look at some of the leaders. Swatch is there. That does have that exposure to the tech story, of course, to the AI story, and that is gaining 3.3% after a strong session and a turnaround in sentiment in Asia. MLIV Group, this is focused on construction. It's a potential takeover target, so that's rallying that stock here in the UK, up almost 40% on the back of that news. OCS, potentially the new acquirer. BAE Systems in the defence space. You are seeing a lift to some of the defence names, possibly tied to what we're seeing in terms of the new UK Chancellor, former Defence Minister here in the UK, up 2.8%. Guy Johnson, of course, is on the ground at Farnborough with further conversations and that focus on defence. In terms of the laggards today, let's flip the board and see how things are playing out for some of the key names on the downside. In the construction and infrastructure space, you've got Jürgen Heinrich over in Germany, currently down 4.2%, making some of the machines that go into that. Schindler, meanwhile, is down 14 points. And Swatch Group, interestingly, they saw profits coming in well below estimates, and that seems to be where investors are focused. But the sales guidance was actually quite strong for Swatch. But nonetheless, that stock is currently down at 3.4% so far. Anna.
So those are the markets. Let's get up to date with some of the other stories we're covering this morning, Tom. The US has said it will impose a fresh 50% tariff on some Canadian goods, saying Canada has been treating American cars, alcohol and dairy unfairly. The levies are due to take effect in 30 days and would mark one of the most severe trade actions taken by President Trump against the US's second largest trading partner. Staying with the US, officials say the country's military has completed a 10th day of strikes on Iran after President Trump promised Tehran would, quote, pay for the killing of 3 US soldiers. But the conflict could expand further, with Iranian-backed Houthi militants threatening to blockade Saudi Arabian shipping in the Red Sea. And the UK Prime Minister Andy Burnham has named former Defense Secretary John Healey as Chancellor of the Exchequer in a surprise move. The decision is fueling speculation about a bigger increase in military spending. Tom.
Well, staying with the defence story, as Europe gears up to increase defence spending in order to reach NATO's 5% goal, the industry is preparing for shifting demand as warfare is reshaped. Let's get back to the Farnborough International Air Show. Guy Johnson standing by with a guest. Guy.
Yeah, we've moved over to the Leonardo stand. We're joined by its new CEO. He's been in the post around 10 weeks, Lorenzo Mariani. Great to see you. Thank you very much for taking some time to be with us this morning. You've been in the job for, what, 10 weeks now?
10 weeks about.
Less than 100 days.
Less.
Do you like what you see? Are you happy with the numbers?
Yes, I'm happy with the numbers. I'm happy with the products that I've seen. And I'm happy with the approach we are taking now to face this very, very challenging moment, although full of opportunities.
Okay, why is it challenging?
It's challenging because we need to accelerate. I think what the world is telling us is that the world has changed. There are many threats. We have to provide our customers and governments with new means of facing those threats, and this means accelerating in new developments, accelerating in new technologies, and accelerating in delivery of what we have already in our hands.
Okay, so let's talk about that. Is the challenge getting orders now? Because it looks like orders are beginning to show up and there's plenty of them. Or is it delivering on those orders? Is that kind of capability challenge the bigger challenge now?
I strongly believe that the challenge is delivery. I think delivery and acceleration of delivery is what we really need to do now. We have a good and a healthy order book. Orders are coming. Markets are very dynamic in all sectors, and I think the multi-domain approach we are proposing is bringing already a lot of results. Nevertheless, we need to accelerate deliveries and to make all these goods and services available to our customers.
One of your customers, and I think you've got 8,000 people here in the UK,
more.
Is the UK and what it's going to deliver. We've just had some big announcements last night. We've got a new Chancellor of the Exchequer, John Healey, who I'm sure you've probably met before. He was the former Defense Secretary. He's now going to be Chancellor. He's very keen on increasing spending. Got Wes Streeting as the new Defense Secretary. Do you welcome these appointments?
Of course, I welcome those appointments, but first of all, I think we are confirming that UK for us is our domestic market, is our customers, and we really understand the spirit of the new DIS with a lot of focus on key projects like the GCAP, a lot of focus on autonomy. Autonomy, we are here in Farnborough with Proteus, that is our proposal, our project for the future of rotary wing autonomy. And I think this will be really an important push for us to satisfy all the needs of the UK market.
Are you confident the UK can increase defence spending?
I'm confident. I'm confident because I think the demand is there. The structure of the new plans are aligned with what we are proposing. I think GCAP will be really a big game changer, not only for UK, not only for Italy, but for the overall market of new generation systems. The sixth generation system is something that will really change the way air power is intended.
Let's talk about who is within GCAP.
Yes.
You have been out in front suggesting that Airbus over the road, and I spoke to Guillaume Faury yesterday, join GCAP in some shape or form. Why does GCAP, the next generation fighter program that BAE is involved with, you're involved with, why does it need Airbus?
Well, I will start from our history. I think we have a long history between Italy and UK of air programs together, starting with Tornado, then Eurofighter, then Tempest, GCAP. So I think it has been quite natural for Italy and UK to join forces. Then Japan, it has been a wonderful discovery. They are professional, they are strong, they are absolutely minded to achieve results in a reasonable time, and we really appreciate that. Then there is Europe. I think Europe cannot afford fragmenting the efforts, and efforts means money, means also brain in many projects, and so my point is that we would welcome, from the industrial point of view, Germany joining the GCAP program. Of course, how and when it's in the hands of governments.
The risk with that, and you're right, Guillaume was talking about the kind of, this is a government decision that ultimately needs to be made. But the risk is that 2035 is the kind of the date, the delivery date. We need to have that sort of set in stone. Certainly the Japanese have made that very clear. If you bring in Airbus, does that date get pushed out to the right? And Europe needs this capability now. You talked about delivery earlier on. Like, Europe needs to deliver. Otherwise, people are just going to buy the F-35, and that seems to be an increasingly kind of big concern.
Absolutely. On one hand, I think Eurofighter is still a fantastic plane that can easily cover the needs of many nations in Europe and outside Europe for the next 20 years. Nevertheless, I fully endorse the 2035 date, and I think for no reason we should delay that. This has been clearly said also by our ministers, who said that in this moment, for no reason, we should think about delaying such a development, but on the contrary, we should try to anticipate that is a challenging effort. So that is the risk, you're right, and I think nations and the industry should be also pragmatic and very constructive in finding ways to accelerate the program while building those capabilities in such a way that the requirement is met.
Let's talk about America. You talked about it being a priority. How do you make that happen, or how do you get a bigger footprint in the United States?
Well, Leonardo has a very good footprint in the United States. I think this is thanks to the decisions that were taken about 20 years ago when we decided to invest in DRS. DRS today is a profitable business, fantastic company, moving up from tier 3 to tier 2 and sometimes tier 1, high technology in different domains, so very good. But in parallel, we also have a presence with our helicopters and with our electronics. So we have already a differentiated and quite heavy presence in the market that is already expected to be the most dynamic in defense.
Okay, let's wrap this all up. You've painted quite a positive picture for me. You've used the word confident a number of times. It feels like you are confident, and it feels like you have great confidence in the company. Your predecessor talked about the idea that maybe we could see an upgrade to the outlook. We could see an upgrade maybe to the earnings. Do you see that in the numbers? Do you see that in the future? Do you see that something that you can deliver now? Are you ready to say, this company's in great shape, we should upgrade the outlook, we should upgrade the earnings picture?
What I'm saying is that the company is in good shape. I think the market is helping us, and of course, as always, when the market is increasing, you have to adapt in order to intercept that demand. Numbers, we are looking at those numbers. We are very close to the disclosure of the half year, so I will not comment today precisely. What I think is that we really have opportunities not only for this year, but also for the years to come. And the real challenge is not only to concentrate on 2026, but also to do all what we can in order to improve by accelerating delivery, getting more orders, but delivering those orders, not only 2026, but the overall plan 2026 to 2030.
Would it be, you talked about the challenge of delivering. Is it that challenge and the kind of the working capital requirements and all the things that go with that would maybe prevent you from upgrading? You talked about the confidence in orders, but you've got to deliver. Is that the challenge in terms of the issues surrounding such an upgrade?
I don't see many challenges in terms of capital investments. I see more an issue in delivery related with supply chain. I think the European supply chain, namely, is quite under pressure because this acceleration often involves that 60 to 70% of our value chain that is in the supply chain, and this is a common problem to all European industries.
Side.
I see in the civil side and the defense, us, our partners and peers. So in my view, that is the area where we have to work more, sometimes investing, sometimes helping them. In any case, helping the supply chain to see better what is our planning so that they can also make the investments in a more targeted way.
It's great to see you. Thank you very much indeed for sharing some of your time with us this morning.
Thank
Lorenzo,
you.
Thank you very much.
It has been a pleasure. Pleasure for me.
Lorenzo Mariani, the CEO of the European defence giant, Leonardo. From Farnborough, we'll be back a little bit later on. We've got some great guests lined up throughout the morning. But for now, back to you.
Guy, thank you. Of course, as Guy says, he will be still at the Farnborough Air Show throughout the day, and he'll be speaking with Lockheed Martin's Aeronautics President, Orlando Sanchez, and with Larry Culp, the Chairman and CEO of GE Aerospace.
OK, coming up, the Trump administration threatens a new 50% tariff on Canadian imports. Details are next. This is Bloomberg. Welcome back to the Opening Trade. We are 48 minutes into the Tuesday session. You're seeing gains, very modest gains across the European benchmark. Stocks are standing up just 0.1% on the upside. Basic resources gaining alongside tech. On the downside, the grocers under pressure, the likes of Tesco and Carrefour. But the gains are coming through on the sector basis, again, for tech and basic resources, Anna, so far in the session.
Yeah, but let's talk about trade. The US says it will impose a fresh 50% tariff on some Canadian goods, alleging Canada has been treating American cars, alcohol and dairy unfairly. The levies are due to take effect in 30 days and would mark one of the most severe trade actions taken by President Trump against America's second largest trading partner. Let's bring in Brendan Murray, who leads Bloomberg's global trade coverage. Brendan, good morning to you. So the US then putting these tariffs on Canada, saying that that America has been treated unfairly. What's the legal basis for all of this?
Well, the legal basis is one that kind of came out of nowhere. It's called Section 338 of the Trade Act of 1930. It's the infamous Smoot-Hawley law from Ferris Bueller fame.
Yes.
And the trade lawyers will be scratching their heads this morning trying to figure out whether Trump actually has the authority to use this. It's never been used for tariffs before. It's been used in the 30s and 40s as sort of pressure on some adversaries, but it's never been used before. And the president surprised a lot of us by coming out with this. Canada has been in a prolonged sort of 12-month tussle with President Trump over trade. And this is just going to add to it. They've got 30 days to figure it out. Otherwise, these 50% tariffs hit roughly $20 billion worth of Canadian imports.
I saw that Jameson Greer had talked about Canada having more favourable trade deals with Europe, and so some may question, well, what do you expect if you're hammering Canada with tariffs? What has the Canadian response been to this? There's a 30-day window. Are these likely to come to effect? How is Canada responding?
Well, the Prime Minister Carney has said basically that they're going to start intensifying the negotiations with the Trump administration. You've got others like Doug Ford who say we're just going to match your tariff with tariffs of our own. So you've got sort of Canada has given President Trump quite a lot over the past year in concessions, and they've kind of run out of concessions, according to many Canadians. And they basically their attitude is what is going to make him happy. And so it's going to make for an interesting 30 days. This ultimately is a negotiating tactic to try to drive the two sides, Ottawa and Washington, together. Washington is already in talks with Mexico, so they're further ahead with Mexico. So this is has all the hallmarks of Trump's strategy to drive the two sides to the negotiating table. Ultimately, Bloomberg Economics thinks that these tariffs won't take effect 30 days from now, that they will have the desired effect. But whether Canada will give Trump what he wants is yet to be seen.
And I thought, Brendan, that these three countries were in some sort of relationship already on trade terms, that this had been set, the USMCA. We know that the US then has backed away from renewing the USMCA. Is that right? But it still is supposed to be in place for another decade.
Yeah, exactly. So it was several weeks ago when basically the three sides says we're not going to extend it for 16 years. We're just going to go to these rolling reviews, these annual reviews. And so this latest action by the Trump administration sort of gives you a preview of what we can expect. The negotiations are really never going to end between these three countries, and at least while the Trump administration has a say in it. And we can expect more sort of uncertainty about companies that are trying to run their supply chains across these three economies.
OK, Brendan, thank you very much. Thanks for the update. Bloomberg's trade czar, Brendan Murray.
OK, let's look ahead at what else we are watching throughout the day. The ASEAN Foreign Ministers meeting will take place in Manila. The European Parliament delegation, meanwhile, will be visiting China at a moment of trade tensions between Europe and Beijing. Certainly 9 a.m. UK time. The ECB's July bank lending survey will be published at 10 a.m. UK time. We'll get a gauge on the sentiment survey. Of course, the ZEW survey expectations out of Germany. And later stateside, US Defense Secretary Pete Hegseth will be testifying before lawmakers over the cost of that conflict with Iran.
Let's get the thoughts then with that day ahead, with the thoughts of Skylar Montgomery-Coney, who joins us from the Markets Live team. Skylar, good morning. So it seems like the tech theme is sort of going Going around the world, once again, we saw a bit of a recovery in some of the semiconductor stocks in the States yesterday. Decent session in Asia for tech. Some tech resilience here in Europe as well. It's not all dominant, though, is it? Because Europe overall is doing something different.
Yeah, I mean, I think generally we're clearly not out of the woods yet on tech, and that's primarily because we have these big earnings coming for us tomorrow and, you know, further out into the earnings season as well. And I think what investors are really questioning right now are who's going to be the winners and losers from the AI trade, because you're having so much spending. Not all of these companies can get a big return on investment. And how worried are you about speculation in the market versus these kind of massive earnings expectations? Because what we've seen is leverage has risen quite dramatically. Yes, it's come off a little bit if you look at ETFs, for example. There's not as much money in them, but certainly because it's been building so long, it's very, very high. Concentration is high, and you have valuations on a trailing basis that look very elevated. Now, on a forward basis, they've come down actually in the last month or so, and that's because earnings expectations are so strong. And so what we need to see is whether or not those earnings are delivered. Can you justify those prices? And it'll really be to the decider of, you know, how these stocks do. And I think we're increasingly not looking at it as a one trade in the sense of everything can go up together, but from an individual stock perspective.
So we get Tesla earnings and Alphabet earnings on Wednesday, so tomorrow, and then we get the other hyperscalers next week. After that, it's just a quiet summer, is it, for the equity markets, for the global markets?
Yeah.
Or is there no such thing as a quiet summer now?
Yeah, we've moved away from this actually in the 2020s. Now, some of this is kind of structural around what the macro regime is and that we have more supply shocks. Geopolitics is clearly an issue. US-Iran, I don't think that's going away anytime soon. But you've also had this change in how we look at earnings, in that tech is not just, 1-2 weeks of the earnings season. It's spread out because semiconductors report further out into the earnings season. You also have more earnings from different regions that matter. So if you're looking at Korea, that still matters for the U.S. market. And so I think it's something that we're concerned about on a longer time frame. On top of that, you have stuff like systematic trading. That means that stuff turns over more, as well as leverage ETF making bigger moves possible. And so if you look at volatility from 2020 to now versus 2015 to 2020, it's much more elevated now, and you don't get that kind of summer dip that we used to.
So that's the summer. Let me think about the German outlook then, Skylar. We're going to get ZEW, investor optimism or lack of that data coming through in around, an hour and 5 minutes. And I'm reminded of what happened in June, just looking on the terminal, the German investor outlook jumping with Iran resolution in sight. And so you wonder if that was the thing that made things better in June, if that takes a step backwards here. I guess we're in a very difficult period to assess exactly how the Iran dynamics play out.
Yeah, and I think certainly from a sentiment position, it gets worse the longer it goes on, right? Because you thought you had a resolution. That's not the truth anymore. We've backed away from the memorandum of understanding being this kind of support for sentiment. And I think because you have such a high level of uncertainty and headlines going back and forth, that, that sentiment is much more worrying for the consumer going forward, and particularly for Germany, that's very much impacted from an energy perspective.
Okay, Skylar, thank you very much indeed. Skylar Montgomery-Koenig from our Markets Live team.
More conversations to come from Farnborough. Guy is there, as we've been saying. He'll be speaking to Orlando Sanchez, the aeronautics president at Lockheed Martin, and Larry Culp, chairman and CEO of GE Aerospace, so the aerospace industry, the civil side and defence side, very much in focus. Quite a lot of defence themes through this programme. That is it for the opening trade. The Pulse is coming up next. They'll continue to take you through the markets. This is Bloomberg.